Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's June 21st. Hope you guys are having a great morning thus far. We have just a couple economic news in the calendar today, and of course, we got the weekly jobless claims that come out every Thursday. Now, last week was revised higher from 218 to 221 thousand. Forecast for this week was supposed to be 220,000, and it came in at 218,000 this week. So again, a great number, very low numbers here. Now this week happens to be a pretty important week, primarily because we have this is the number that the week that they use for the Bureau of Labor Statistics when they come out with their jobs numbers for the month for the June report. So when in July, when we get the Bureau of Labor Statistics, this will be part of the equation that comes up with those numbers for job numbers. So this is an important week here. So with a low number like this, most likely we'll have a good, strong jobs number coming up. Now, also we got the Philly Fed, which is the manufacturing in the Philadelphia region here for the month of June. So in May, we had a pretty hot number here at 34.4. Now, forecast was supposed to be a little bit lower at 29, but it dipped all the way down to 19.9. Now, this could be, again, on the heels of, last week of when we had forecasts of, or not forecast, but with Trump announcing implementation of the tariffs on China. This could be their way of pulling back a little bit on the manufacturing side. So we saw this about 2 months ago when some of this stuff started surfacing, and it's like as soon as those were announced, that's when we had look like a pullback. Then the next month it was a little bit better. So let's keep an eye on this, see how this turns out. Last week we had the Empire State Index, which was the manufacturing in New York, and that looked pretty good. But remember, it was just announced like Friday when Trump was going to go ahead and start implementing those tariffs on China. Now, move ahead here. We got leading indicators for the month of May. April had a good month. It was going up 0.4, but it did slow up a little bit in May, just going up 0.2% here. So again, this is something we'll want to keep our eyes on, see if this continues this route. But of course, we always like to see this a little bit higher. This gives us kind of a little bit of insight as to the future of the economy moving forward. So we want to make sure it doesn't slow down, obviously, for good reasons. We were just kind of getting heated up here, and of course, people like to keep the good thing rolling here. Let's kind of move ahead to the headline news. Stock market is down, and of course, it's taken its cue from their concerns over the U.S. trade ramifications here. They're concerned about China, but they're also thinking about the European community and possible trade wars with those countries as well. So how is this affecting the bonds? Let's take a look here. And right now we're up. Yesterday we came down. We're kind of in this tight range here between the 25 and the 50-day moving average. Yesterday, we started off up about the 50-day moving average, and we came down touching off the 25 and pulled back a little bit. Today we started the day touching off the 50-day moving or 25-day moving average, and now we're trying to break above it. So we don't have any price improvement, primarily because we're only up about 9 basis points. But again, at some way we're going to see one way or the other here, and but if anything, we could most likely see this kind of continue going downwards. We did have a crossover the other day, about 2 days ago, stochastic crossover, which usually tends to this kind of follows it where basically if the trend changes. So as we saw, we had a little bit of a trend going up this way, and then it crossed over, and usually should be pushing us the opposite direction. So just be a little careful if you are out there and you have interest rates floating. If you're in a purchase or a refinance transaction and have not yet locked in, you may want to look into that. If you're not, you want to make sure that your loan officer has a finger on its trigger ready to go in case it goes sideways on you. Now here's the 10-year Treasury here. Again, we started upwards. We left today pretty good at about 2.93, I think it was. And now we're down about 2.91. We did touch off the 100-day moving average. We're still in this range as well. So again, we're kind of in this range between the 100-day and the 50-day moving averages. So we got a little room on both sides here, and as these kind of move, it's going to be tightening up a little bit. It'll force us to go break in one direction or the other here. So again, just be cautious here if you are out there if you are in a transaction and have not yet locked. Just be very cautious going forward here. That's pretty much it. If rates are about the same as what we left off yesterday. There really hasn't been a whole lot of wiggle room as it's been going between those. The mortgage-backed securities have been going between its 25 and 50-day moving average. You're talking between 6 and 9 basis points, so it's not enough to really to make any difference in the rate. But however, it could throughout sometime in the day could quickly break one way or the other. So just be cautious out there. I do put stuff out on Twitter. Sometimes it's not information I put out here. Like today, I put some information on FHFA home price index out there. So if you want, just come over to Twitter. You can get more information. And I do post throughout like midday report, closing, stuff like that out there on Twitter. So just jump over at Twitter, follow me over at Mike Bjork, and you can get the day more updates throughout the day if that's what you like. All right, you guys have a great rest of your day. Thanks so much for watching. See you guys tomorrow. Bye bye.